When it comes to filing your taxes, it's important to keep a few things in mind to ensure that the process goes smoothly and you get the most out of your return. Here are a few tips to keep in mind. 1. Gather all necessary documents. To accurately file your taxes, you'll need to have all the necessary documents on hand, including your W-2 form, which shows your earnings, 1099 forms, which show any income you received from sources other than your employer, and any other relevant tax documents. There are a few key documents you'll need to have on hand when it's time to file your taxes. These include 1. W-2 form. This form, provided by your employer, shows how much money you earned in the previous year and how much tax was withheld from your paychecks. 2. 1099 forms. If you received income from sources other than your employer, such as freelance work or rental property income, you'll receive a 1099 form showing the amount of income you received. There are several different types of 1099 forms, so be sure to include all the ones that apply to you. 3. Receipts for deductions. If you're claiming deductions on your tax return, you'll need to have receipts or other documentation to back up your claim. This may include receipts for charitable donations, mortgage interest, and other deductible expenses. For previous year's tax return, it can be helpful to have a copy of your previous year's tax return on hand, as it can provide valuable information and help you ensure that you're not missing any important documents. 5. Social Security number. You'll need to provide your Social Security number, or your spouse's or dependent's Social Security number, in order to file your taxes. 2. Know your filing status. Your filing status determines which tax forms you can use and what your tax rate will be. There are 5 filing statuses to choose from: single, married filing jointly, married filing separately, head of household, and qualifying widow, or with dependent child. There are 5 different tax filing statuses you can choose from when you file your taxes. Single. If you are unmarried, divorced, or legally separated as of the last day of the tax year, you will generally file as a single taxpayer. Married filing jointly. If you are married as of the last day of the tax year, you and your spouse can choose to file a joint tax return. This allows you to combine your incomes and claim certain deductions and credits, which may result in a lower tax bill. Married filing separately. If you are married but prefer to file separate tax returns, you can choose this filing status. This may be a good option if you and your spouse have complex finances or if you want to take responsibility for your own tax liability. Head of household. If you are unmarried and you paid for more than half the cost of maintaining a home for yourself and a qualifying person, such as a child or a parent, you may be able to file as a head of household. This can result in a lower tax rate and a larger standard deduction than the single filing status. Qualifying widow, or with dependent child. If you are a surviving spouse and you have a dependent child, you may be able to use this filing status for 2 years after the year your spouse died. This allows you to use the joint return tax rates and the highest standard deduction amount. Which filing status you choose will depend on your individual circumstances. It's important to choose the one that best reflects your situation and allows you to get the most out of your tax return. 3. Take advantage of deductions and credits. If you're eligible, deductions and credits can significantly reduce your tax bill. Some common deductions include charitable donations, mortgage interest, and student loan interest. Credits, on the other hand, are subtracted directly from the amount of tax you owe. Examples of credits include the child tax credit and the earned income tax credit. Deductions and credits are 2 key ways you can reduce your tax bill when you file your taxes. Here's a brief overview of each. Deductions. Deductions are expenses you can subtract from your taxable income, which can reduce the amount of tax you owe. There are 2 main types of deductions: standard deductions and itemized deductions. Standard deductions are fixed amounts that you can claim based on your filing status. They are designed to simplify the tax filing process and reduce the burden of itemizing deductions. Itemized deductions, on the other hand, require you to list and provide documentation for individual expenses you want to claim. Some common itemized deductions include charitable donations, mortgage interest, and medical expenses. Credits. Credits are directly subtracted from the amount of tax you owe. This means that if you are eligible for a $1,000 credit, your tax bill will be reduced by $1,000. There are two main types of credits: non-refundable credits and refundable credits. Non-refundable credits can only reduce your tax bill to zero. If you are eligible for a non-refundable credit and your tax bill is already zero, you will not receive any additional benefit from the credit. Refundable credits, on the other hand, can result in you receiving a tax refund even if you do not owe any taxes. Examples of refundable credits include the Earned Income Tax Credit and the Additional Child Tax Credit. By taking advantage of deductions and credits, you can significantly reduce the amount of tax you owe and potentially increase your tax refund. Four, consider hiring a tax professional. If you have a complicated tax situation or just want to be extra sure you're doing things correctly, you may want to consider hiring a tax professional. They can help you navigate the tax system and ensure that you're taking advantage of all the deductions and credits you're eligible for. 5. File on time. The deadline to file your taxes is typically April 15th, but this year it has been extended to May 17th due to the COVID-19 pandemic. If you need more time to gather your documents or file your return, you can request an extension. Keep in mind, however, that an extension only gives you more time to file your return. It does not give you more time to pay any taxes you owe. It's important to file your taxes on time for a few reasons. Avoid late fees. If you don't file your taxes by the deadline, which is typically April 15th, you may be subject to late filing fees. These fees can be significant, so it's important to file your return on time to avoid them. Claim your tax refund. If you are owed a tax refund, the sooner you file your return, the sooner you will receive your money. If you file your return late, you may have to wait longer to get your refund. Avoid interest and penalties. If you owe taxes and you don't file your return on time, you may be subject to interest and penalties on the amount you owe. These additional charges can significantly increase the amount of money you have to pay. Keep the IRS off your back. If you don't file your taxes on time, the IRS may send you notices and letters reminding you to file. This can be stressful and time-consuming, so it's best to file your return on time to avoid this hassle. By filing your taxes on time, you can avoid these headaches and get on with your life. If you need more time to gather your documents or file your return, you can request an extension. Keep in mind, however, that an extension only gives you more time to file your return. It does not give you more time to pay any taxes you owe. By keeping these tips in mind, you can ensure that you're well prepared to file your taxes and get the most out of your return.